So the Genius Act was just signed into law. It aims to provide essentially clarity for institutional adoption in the US by setting up a regulatory framework for payment stablecoins. First major crypto legislation, big story, lots to unpack here. So Matt, what is your perspective on this Genius Act? What does this legislation mean for the future of stablecoins in your perspective?
Absolutely. It's a huge deal. I think people probably don't understand the scale of its importance in the ecosystem. It's probably best to go back a year ago and talk about where we were from a regulatory perspective then, which is effectively nowhere. There were no clear rules. It wasn't clear if US companies could accept stablecoins, could issue stablecoins. They existed in sort of a regulatory gray area. And despite that, they grew significantly. They went from $0 at the start of the decade to about $250 billion. That's a lot. But what this act provides is clear regulations that will let the largest firms on Wall Street issue stablecoins, let the largest merchants accept stablecoins, and encourage companies to use stablecoins for payments, for international transactions, etc. What you can expect from that is a boom in stablecoin assets. I mean, that's the most obvious thing. I think the US government alone says stablecoins are to go from $250 billion to $3 trillion in the next 4 years. Hard to find an area of the market where the government's base case is for it to 8x in 4 years. That's an incredible endorsement. It's a reason I'm very bullish on the sector. But the other thing it's going to do, I think it's going to dramatically de-risk the crypto market. I think a lot of people look at the growth aspect, and that's obvious, $250 billion to $3 trillion. But if you look at crypto's history, Kinsey, a lot of our biggest setbacks have come because there wasn't regulatory clarity. FTX happened because there wasn't regulatory clarity. Mt. Gox happened, which was a big custodian that failed because there wasn't regulatory clarity. Stablecoins are the first instance. There's more to talk about, but we're getting that regulatory clarity. I think it means faster growth and lower risk in the years to come, and that's a pretty good setup for investors.
Certainly. I mean, if you have to sum it up with just faster growth and lower risk, it sounds pretty enticing, I'm sure, to a lot of people listening to this. But you bring up a really interesting point here that this perspective on regulation is something that is relatively new for crypto, despite the fact that this asset has existed for quite some time now. But even in the last presidential administration, there was a very different approach to regulating crypto, to crypto in general. Knowing that we have, in theory, right, a new administration every 4 years. Do you expect that any of that could shift or could change at the end of this Trump administration, knowing that this administration has really embraced crypto regulation, has tried to set up these systems that lead to the kind of reality that you were just referencing with this Genius Act? What comes next? Does this stick around? Is this something that's permanent, or is this something that could change in 3.5 years when we have a new administration step in?
It's such an important question, and I think it's misreported in the mainstream media, where you hear a lot about Democrats versus Republicans in crypto, because there is an arm of the Democratic wing that is aggressively anti-crypto, right? Senator Warren from Massachusetts said she was launching an anti-crypto army. I'm not even sure what that means, but it doesn't sound good. But the reality is, actually, there is broad bipartisan support for crypto, which tells me that it will persist into the future. If you look at the vote on the Genius Act, it attracted, I think, something like 80 Democrats. It was one of the most bipartisan votes that Congress has had this year. There have only been, I think, 3 major pieces of legislation that got over the 60% level in the Senate and got that level of Democratic support in the House, and crypto was one of them. So I think that this is here to stay because there is support both from Democrats and Republicans. There's support from the crypto industry and from the traditional financial industry, which is a big backer of Democrats because they want to participate in this crypto gold rush. So I think if there's alpha in the market, it's recognizing that despite the media contrast of pro-crypto Republicans, anti-crypto Democrats, there's actually broad bipartisan support specifically for stablecoins, but I think for more. And as a result, I think this positive development will stick. It will persist no matter who wins future elections. I think we're in a new era of regulation from crypto, and it's going to be a good one.
Yeah, really, really interesting to consider what that new era entails. And one final, more specific question about regulation I'd love to hear your thoughts on. The Clarity Act is another piece of legislation that I have been reading about. Passed the House last week, essentially designed to provide clearer regulatory frameworks for crypto, knowing what assets are securities, what are commodities, why, some very big and important questions. How does this kind of legislation, in addition to that Genius Act, open the door to more adoption in your view?
Yeah, it opens the door to more adoption because it makes it clear how investors and companies can interact with these crypto assets. I know this sounds crazy to viewers, but in the prior administration, we had two regulators, the CFTC and the SEC, who literally disagreed over who got to regulate crypto assets. We would go to one because it matters for how we design products and sort of ask, is this a security or a commodity? And one regulator would tell us one thing, and the other regulator would tell us the other thing. And it can't be both, right? This isn't Schrodinger's box. The cat is not both alive or dead. It's either one or the other. The Clarity Act will solve all that, and it'll put crypto on a strong footing. I think the best analogy is back to the early days of the internet, when it existed in a sort of a regulatory gray area. And there were a number of key bills that talked about liability and how the internet would be regulated, which set the stage for a 20-year bull market in internet companies. Yes, with some volatility, but generally a massive appreciation. That's the same thing here. We're setting the table to put crypto on a firm regulatory footing where it can exist side by side with traditional finance. And that's why you see every major Wall Street company talking about stablecoins, talking about tokenization, offering trading in Bitcoin and Ethereum. I think it sort of sets the table for a strong multi-year bull market. I'm extremely bullish about what the Clarity Act means. And it's just going to make our life easier in the crypto industry because we'll have clear answers.
Yeah, and certainly some aptly named legislation, right? So you brought up tokenization. I would love to dig into that a little bit more. Generally, tokenization of assets has become a pretty hot topic, both in terms of the regulatory approach and ease of access from exchanges. We're talking about shares of private companies like OpenAI and SpaceX. BlackRock CEO Larry Fink said, "Every stock, every bond, and every fund can be tokenized." End quote. What do you think? What does that mean for Wall Street's adoption potentially of tokenization in the future?
Yeah, it's going to happen. I think the place to start is first by describing how sclerotic and slow the existing system is, right? Stocks settle T+1. That means when you buy a stock, I know your brokerage makes it seem like you own it instantaneously, but behind the scenes, the paperwork to actually put it in your name takes a full day. If you're buying international stocks, it can take multiple days. And then, of course, these stocks trade 9:30 to 4, Monday through Friday, except for holidays. It's insane. Like, we go to Amazon, we can order anything in the world, it'll be delivered in an hour. But when we buy a stock, which is just transferring digital ownership from one place to another, it takes 24 hours. There was a Bloomberg headline, we recently went to this T+1 settlement, that said stocks move the fastest in 100 years. Imagine that in any other industry. Like, cars catch up to where we were in 1925. It's absurd. So tokenization is the idea that using blockchain-based rails, we can settle stocks not in a day, but in a second. Not with high cost, but with no cost. Not nationally, but internationally. Not with a huge middle office of Wall Street paper pushers, but with automated digital systems. It's sort of finance 2.0. Now, there's a lot of work to do before the stocks that your customers are buying are settling on tokenized rails. But what we're seeing is major firms experimenting at the edges. So what do I mean? We've seen firms launch tokenized access to US stocks for international investors because they have a hard time using US systems. You mentioned tokenized access to private company stock, right? We're sort of rebuilding the infrastructure of how Wall Street works. And I think it's inevitable. That's why all these firms are doing it. The analogies I would make, we remember when we used to do stock trading on the floor with big football players raising their hands and stuff. It was crazy. Now we do it digitally. We remember when we used to trade mutual funds. Now we trade ETFs. Financial systems do upgrade over time. This is the next big one. It is going to completely remake how money moves around the world. And we're sort of at day zero. And investors have a chance to participate in that if they can find the companies that are aligned with the growth of tokenization. And there are a few of those.
Yeah, really, really interesting to consider the evolution that has always existed in public markets and in investing in general. To think that we, are witnessing this happen in real time is really cool, especially after, as you mentioned, 100 or so years of not a ton of innovation. So it's very interesting to consider how that might impact the ways that we invest in the future, especially for an audience listening to this from, public. So while we're on the topic of public markets, let's talk about Circle. So Circle, stablecoin issuer, IPO'd last month. Investors really sort of jumped all over this. Shares were way, way up. I checked this morning, they're up about 130% since their debut. But just yesterday, Compass Point downgraded the stock from hold to sell, talking a little bit about valuation concerns, increased competition in digital assets. I want to hear what you think about this Circle IPO. Certainly one that a lot of people have followed the news on. What does it mean for the broader crypto industry in the bigger picture of traditional public markets?
Yeah, absolutely. And then happy to talk about Circle itself because I actually think it may be a generational hold for long-term investors. But what it means for the IPO market is you're going to see a large number of crypto companies come to market. This IPO was 25x oversubscribed. It was the most successful IPO in 10 years. That tells Wall Street that investors want access to crypto stocks, that there are not enough of them. And because of the harsh regulatory environment we faced for a number of years, we don't have enough public crypto companies. You have a company like Coinbase, an incredible company, but why is it the only publicly traded crypto brokerage? There are others. Kraken is a very large, very successful company with multiple revenue streams. They're surely going to go public. We saw Grayscale, a crypto asset manager, file a confidential crypto IPO. We think there could be another 5 to 10 major IPOs in this space. One thing it tells investors is there are two ways to invest in crypto. You can buy Bitcoin and Ethereum and other assets, maybe in an ETF structure, but there is also these companies that are building fast-growing businesses in this space. The average revenue growth of a crypto-focused company is the fastest industry in the S&P 500. They're growing revenues at an exceptional rate, and not every one of these companies is going to be a winner, but you have to pay attention to this space because there are these great companies, and I think Circle is one of them, that are going to be around for a number of years and going to be, I think, very successful over time.
With that in mind, knowing that a lot of investors listening to this certainly are trying to invest for the long term or trying to find those generational holds. There are still memories for a lot of us of some of these crypto stories that are just implosions, right? You mentioned a couple at the beginning. FTX, Mt. Gox. It wasn't that long ago that Terra Luna collapsed after losing its dollar peg. I think it was like 2022. How does the industry evolve from those headlines of lots of people losing lots of money to something that's a generational hold, to something that is, a significant portion or a significant strategic play in an investor's portfolio? Tell me a little bit about that evolution in terms of public perception, but also just in terms of, a maturing industry.
Yeah, absolutely. Public perception is going to lag because those scars cut deep. I still wear them for sure. And as a result, I think that creates an alpha opportunity for investors, just as it has over the past decade, right? Bitcoin is up 40,000% over the past decade, which is an incredible number, despite all these blowbacks. So if you can accept that this is part of the history, but it's changing, I think that's a real opportunity. What it means, what I think we'll see in the industry goes back to what we started talking about, which is all of those scandals emerged because there wasn't clear regulation. Why did FTX become popular as an offshore exchange located in Bermuda? Because you couldn't access the investments they were providing access to using a more regulated venue, right? We don't see people trading stocks on Bermuda-based offshore exchanges. They just don't do it. Why would they do it? They could just trade stocks on public, or they can trade stocks on another reputable provider. So, or Luna is a great example, right? Luna could not happen under the Genius Act. It would be illegal. They didn't have one-to-one backing of their assets with treasuries. You couldn't have had that happen. So I think maybe the opportunity for investors is to recognize that the reason these blowups happened was not something wrong with crypto. It was that there wasn't regulatory clarity, and in the lack of regulatory clarity, bad actors emerge. Will there be more blowups in the future? Of course. There are blowups in TradFi, right? Bernie Madoff existed in the traditional finance system. We're not repealing scams, but they'll be dramatically reduced. I think cut down by 90% or more. And that means this industry will be lower volatility. You'll have shorter, smaller pullbacks, and that helps make it that generational buy and hold.
Yeah, super interesting to think about, the incentive structure to, number one, have rules, but number two, to follow those. And I think that public perception also gets a little bit of a boost from these big names that we see tossing their hat into the ring. For example, JP Morgan is reportedly preparing to lend against clients' crypto assets, possibly as soon as next year. When we think about a white glove bank like JP Morgan participating in this industry actively and making crypto banking something that is entering our everyday lexicon, I wonder how that also moves public perception forward.
It's huge. I've been at Bitwise for 7+ years. 7 years ago, you would talk to people and they would say things like, oh, but Warren Buffett says Bitcoin is rat poison squared. Now we have the counter to that. Now we have Larry Fink saying every asset can be tokenized. Now we have Jamie Dimon, traditionally a crypto skeptic, saying we're going to be doing crypto banking. Right now we have Stan Druckenmiller and Ray Dalio talking about the importance of allocating to crypto as part of their portfolios. There's still skeptics out there for sure, but it was lopsided for a large number of years. Now it's not. And the other thing, Kinsey, that really does is one of the reasons traditional institutions, pensions, endowments, et cetera, that have trillions of dollars of assets didn't invest in this space was because of that headline risk, right? They were sticking their neck out to buy an asset that Warren Buffett was skeptical of. But now, if the U.S. government has regulations in space, if Jamie Dimon is building in this space, if Larry Fink's saying it's going to transform the industry, suddenly it's a lot safer for these big pools of money to come in. And I think we're going to start seeing that over the next, let's say, 12 to 24 months.
Yeah, super interesting. And speaking of the next 12 to 24 months, as I mentioned at the beginning of this conversation, Bitcoin hit an all-time high this month, soaring past $122,000. So to close out the conversation today with a look ahead, where do you see that price going by the end of this year?
Yeah, I'm sticking by our December prediction that we're going to get to 200,000. When we look at the market, it's really simple. People like to make it complex. It's supply and demand. And right now, because of the institutional move into Bitcoin and because of corporations like MicroStrategy buying Bitcoin, there's 5 to 8 times more demand for Bitcoin than there is new supply. You only need to take Economics 101 to know that more demand than supply usually means the price goes up. We think it goes up substantially. I would note that October and November are historically the best months for crypto. I think we're setting up for a strong Q3 and Q4. I actually think there's never been, because we've removed so many risks, the custody risk, the regulatory risk, the legislative risk, I think there's never been a better opportunity on a risk-adjusted basis to allocate a small part of your portfolio into crypto. I could be wrong. There's no guarantee, right? Crypto is a volatile space, but I think we end the year at $200,000 or above, and I'm really excited to see the next few months unfold.
Yeah, really, really interesting. Matt, we'll have to check back in December and see where we are. But really wonderful insight. Thank you so much for coming by today and talking about all of this. It's certainly a lot to unpack, and I really appreciate all of the wonderful and thoughtful analysis.
Oh, thanks for having me. This was fun.
Awesome. Well, thank you. And thank you to everybody for listening. Once again, that was Matthew Hougan, CIO at Bitwise Asset Management. I'm Kinsey Baker, and we'll see you next time.